Hi, this is Phil at the Laptop Trader Channel on YouTube. Welcome to our community. I'm here to share my experience and give back to the stock investing and trading community one video at a time. Um, we'll cover market cycles, stocks, ETFs, technical analysis, and other uh, concepts to create confidence by putting the odds in our favor. So good luck. My email contact is laptoptraderphil at gmail.com. So you're welcome to comment there or send me any questions you may have. Caution, most stock traders lose money. Please protect yourself at all times. Nothing discussed in this video is trading or investing advice. This channel is for informational purposes only. Please seek qualified help if you need help investing or trading. This month's agenda, November 2023, we're going to take a monthly technical view of the markets and some individual stocks. Towards the middle, maybe I'll give you guys some possible uh, stocks to watch, put on your list, and see if you can make some money off of those names. As always, we're going to review a few basics for new members who've maybe never traded before or haven't been exposed to technical analysis or aren't really sure how to go about it. So we always do that every month. Then this month's topic is we're going to look at clues to market direction, how to be a price detective. We're going to take a look at the overall trend. We're going to look at multiple time frames, how that relates to moving averages, volume spikes, price spikes. Look at consolidation areas. Look at sector or industry strength or relative strength or weakness. And then finally, don't forget that we are in earnings season. Always check your earnings dates, and I like to check, are my earnings growing or declining? And then from that information, we will um, formulate or come up with our directional bias. So that information will answer the question, what is our directional bias, if there is one? Sometimes there's not. Then we're going to, I'm going to put out there a investor or trader apprenticeship program starting next year. I'll be accepting applications up into December 31st, 2023. And then the apprenticeship will start Saturday, January 13th. It'll be for 1 year for one-on-one help for 1 to 3 people. So I think that's something I can handle in 2024 if somebody needs some help and you're just not sure where to go. I'm offering a 1 year free apprenticeship for 1 to 3 students. And then finally, I'll have a quick advanced monthly topic of buy and sell zones using the price chart. And like I said, a few new ideas from my watch list. So here is just something I put together a few months ago. 3 very basic rules to limit risk up front. Your account size does not matter. Your experience in other industries does not matter. What matters is your experience and your tolerance for risk. Um, so I'll quickly read through these. One, have a trading plan. If you don't have one, that's something you need to work on or think about. Limit your position size to a percent or a dollar amount per trade based on your account size and your experience. I call it my catastrophic loss or gap rule. What will cause you some sleep loss? Then we have a stop loss rule. This actually allows you to buy more shares than you would otherwise normally allow yourself to buy based on a stop loss. This further reduces your risk by using stop loss. If you're a new trader, try using $10 risk per trade. For example, if you had a $2 stop under your purchase price, you could buy 5 shares, right? So $2 stop loss times 5 shares would give you $10 risk. This is just a basic drawing of the 4 market stages going from left to right. 1, then 2 is an uptrend, then 3 is a peak, and then 4 is a downtrend. I like to look at that as something like music, right? New song comes out, nobody knows about it, then it becomes popular, and then everybody wants to hear it and listen to it, and then after a while people start to move on and start listening to other music or get sick of that song, and then album sales go down and people stop listening to that particular song or that band. And then they either come up with a new song or a new album, or they don't come out with anything new, and they basically go out of business. So that's how I look at that. I kind of relate that to music. There's different names for the 4 stages, and you'll hear these in the media, such as terms like accumulation, consolidation, distribution, fear, greed. So that's just a picture of kind of what a chart may look like and where those stages would take place. This is what it would look like in reverse. So you have a stage 3, which would be like a peak, turns into a stage 4 downtrend, and then you get some, then the selling stops at stage 1 and kind of goes sideways for a while. Then you get a stage 2, a new uptrend resumes, and prices start to increase. This is just a quick diagram of how to read a candlestick. Basically, the entire length of the candle or the bar is the range. You'll have a high and a low price for the period being viewed, whether it's daily or whatever. You'll have the body of the candlestick will be the open and the close. And then the ends are oftentimes called tails or wicks, like a candle. I tend to use the term tail. The only difference between red and green candles is the green opens at the bottom, closes higher, and the red candles open at the top and close lower. So very easy to read chart. This is the concept of a pivot. This works best on a daily time frame. And for example, on a monthly time frame, you may only need 1 candle to the left or right of that pivot to form a pivot, whereas on a daily, we generally use 3 candles or bars to the left or right of the pivot. So you can see a pivot high and a pivot low. That's what they look like on a chart. This is just like a buy setup that I like to use. I call it a 3-bar turnaround, 3-bar turn, indicating a reversal, indicating prices moving and changing directions, going from down back to up. This works best in an uptrend. This formation happens all the time, so location matters and timing matters with the setup. You have to kind of get used to looking for that. So let's look at some charts, some live charts, and get our brains working. Practice looking at price for our stock market or market ETF selection. If we're going to rely on technical analysis, we need to practice and get good at finding the best chart pattern that matches our trend bias and our trading plan or strategy. So good luck. I'm going to go back to this slide so we stay on topic. So let's take a monthly view of the markets, and then we'll start getting into our main topic, how to be a price detective. So first, let's review. This is just a list that was put together by me of different ETFs. Take a look at some charts here. We'll take a look at a monthly chart. So this is just S&P 500 ETF, symbol SPY. And we can see when you're reading these charts, you go left to right. You can see the general uptrend, right? So you can see here, if we were to draw a line, go like this, right? We had a sell off here. We had an uptrend, right? We had this climax here and peak in 2021 into 2022, and then we had a downtrend. Now kind of resume this uptrend in 2023. In the last 3 months, going into November, we had a little bit of a sell-off. Prices have kind of resumed up here in November 2023. So I think you guys, that's pretty clear as to where we're at with the S&P 500. We were started off November pretty strong on a monthly basis. And when we look at this pivot down here, and we look kind of in maybe this area right here, we'll call that a pivot. This area here kind of exceeded that. And so this pulling back is pretty natural. This area here would be considered kind of a minor support area. And then maybe under here would be considered major support. So it kind of makes sense that markets were so strong this year that a little bit of a pullback was expected. So and now we're kind of look like we're going up for November in the year. We look at another major market. This tracks the NASDAQ index. This is the ETF, symbol QQQ. This is our second major market indicator that I like to watch. So the reason we watch, most stocks follow the market up or down. So you can see the uptrend and then the downtrend and then this kind of pattern like that. So this was a little bit stronger than the S&P 500, quite a bit stronger. In fact, I think year to date this is up 30 some percent, maybe close to 40%. And S&P 500 I think is up like less than 20% this year. And so this has had relative strength in the QQQ index or ETF. So similar picture to the other one. This one is pretty classic pattern, what they call like a cup and a handle. And then you kind of look for this to kind of break out like that. So that's kind of, I think, what we're seeing going into the end of the year. You can see these moving averages. This is a shorter term moving average, longer term moving average. The price went below that, and the price went above that. Now we've retraced towards that moving average. So that's kind of a helpful indicator that help us kind of determine kind of which way we can expect price to go. I personally do not use a moving average cross theory. I watch more what is price doing versus the moving average. So you can see uptrend price kind of followed these moving averages up. Price crossed below the moving average. And as prices went down, you can see that it took a long time for this moving average to cross the other moving average. So I don't use that type of theory. The moving average cross theory, I don't use that. So look at a few more of these ETFs to get our bias. It's a long-term bias. These are monthly charts, right? So this is the Diamond ETF, DIAs. This stands for the Dow Industrials ETF. This is showing some relative weakness to the other two, where we have quite a bit of strength here, right? Buying. We reached that same plateau or same peak. We also had the sell-off 2022, and then this turned up early in 2023, but it has since went sideways. So this is just going sideways and showing weakness to the other two major markets. So I thought industrials this year after this would really kind of continue higher, outperform. They have not. They've underperformed. So the reason that's important is because we only make money in the stock market a couple of ways. One is through price appreciation, right? You buy low, you sell high. It's one way to make money, right? You could also do short selling, where you sell high and then buy back low. That's a short sale. It's the exact opposite of going long. You go long, you buy low, you sell high. The only other way to really make money in the stock market is through what's called dividends. So you buy, shares, hopefully in a low point, and then as price appreciates, you make some money, and then over time you can see this ETF pays dividends. Every month, this is paying a dividend. That's another way to make money in the stock market. One problem with dividends is usually they're a fairly low percent return, generally under 5%. And if you lose, let's say from plateau or peak to trough, you lose, let's say 25%, dividends are not enough to make up for that until price resumes and you actually own the stock at a lower price than what you paid for because of your dividends if you don't spend the income. So some people use dividends for income. That's just a little bit of information there. So you can see the trend, right? It's a little bit different looking than the other charts. We had like a 3 to a 4, and now we've kind of went sideways, which is more of a consolidation or a sideways trend, more of a stage 1 or a range. Some people would call it is a range. You got the tops of these prices, you have the lows of these prices, so it's in a range too. Sometimes called a trading range in the Dow Jones Industrial ETF. Then the other one I like to watch is the transport index, or the ETF IYT. So here you can see this one again looks a little bit different than the other three. We had a sideways trend. We had this COVID sell-off, I believe. And then we had an uptrend. And we had a pretty defined plateau with these tops here. And then we had a stage 4, right? We kind of had this little bounce and a sideways trend, and this looked like this was going to just go, just keep going up like that. And then recently we've had a pretty large sell-off in transportation. 3 straight months of range expansion bars back to the bottom of the range, and now in November we have some buying. So this is looking kind of weak compared to the other the other 3 major market ETF indexes. So transports look like they had some strength, and now they've basically given away all the gains that were made this year. So that does not look good for transports in general. Few more I like to watch would be the volatility index. This you can't trade, but you can just watch it. It just shows overall S&P 500 volatility. We are currently kind of at a low point at 1529. That would be considered fairly low. And so this is kind of at a low volatility, indicating there's not a lot of fear in the market. There was a little bit of fear the last 2 months when that went up over, I don't know, probably got up to 23 or 24. This would be considered fairly high volatility at 30. There's your price there. This would be more extreme at 40. And low volatility is generally under 20, just to give you an idea. So we're kind of at a low point volatility, indicating lack of fear at the moment. So when stocks or other market events take place, oftentimes fear will spike up. So this right here was this was the fear of worldwide pandemic. And you can see that really got to historic levels, almost to 90 out of 100 on volatility. I believe the great financial crisis got up in the 80s, if I remember right, back in 2008, 2009. So just to give you a historical context of volatility, generally it stays between, 15, 14, 13, and 30 is a pretty normal range on volatility. And here's a few more I watch. This is more for broad-based index, which tracks the Russell 2000 symbol IWM. So this is a similar looking picture to the transports and relative weakness right now. This looks really weak. And November gave us this topping tail bar, which also looks kind of weak. Again, sideways trend, and then it kind of popped up and just went down. Actually broken quite a bit of support there. So that looks not good for the general market and economy because this tracks so many more stocks than just the big, large companies in the S&P 500 and the Nasdaq. So this is a more broad-based representation of small companies and mid-sized companies. So that doesn't really look good, in my opinion, going into the end of the year. We've got mid-cap ETF NBY. This again sideways trading range. You can see the trend there. We're at a 2 to a 3 to a 4. Now we kind of went sideways, another sideways range, trading towards the bottom of that range. That looks kind of weak. And so if you can read a picture, you can read the market. And that's kind of my basis for trading and investing. This also is a small cap tracking stock, SPSM. Tracks quite a few small cap companies. So again, small caps were kind of bought up and sold off over 100% from bottom to top, back down, and now we're trading towards the bottom of the range. Not showing a lot of strength there either in small cap stocks. So usually when everything's kind of clicking and everything's working, and everything's going up, small caps and mid caps and most companies will participate in that. And so far this year, that has not been the case. It's been big cap, big companies like Meta, Facebook, Nvidia, Microsoft, and other big companies, and several other sectors have not done so well. And then we can also watch something like interest rates using this ticker TNX, $TNX. This tracks the 10-year Treasury note, so you can see interest rates have been in an uptrend. Right, that's pretty easy to see. You look from left to right, we get this downtrend in interest rates and sideways, and then you see this spike in interest rates, inflation. Right, so we can actually look at inflation and interest rates on a chart, which cost everybody more money every day. So that is how we track that. Currently, we're at decade highs interest rates. And we can also track the reverse, and that is bonds. Bonds generally go down as interest rates go up. Right, so you can see the trend in bonds using symbol TLT, where you have this uptrend, and then you have kind of this plateau, and then this sell-off in bonds, and then there's this really strong sell-off on bonds as interest rates have went to very high levels historically. So that's where we're at on bonds. Is this a buying opportunity in bonds? I could be soon. I don't think it is now. So we'll just keep an eye on that. So you can, one clue that I think bonds possibly getting near a bottom is this volume spikes. When we see volume spikes, that's something we pay attention to. We also pay attention to areas like this, where volume actually goes down and kind of dries up, and then we watch And we see, well, what happened after that? And what happened after that was prices continued down. So that was you kind of watch when the volume dries up. What happens after the volume dries up is another interesting thing to watch. You also see on this large candle or bar, see how large that bar is? That's called a range expansion bar, and that happened on volume, indicating kind of the top of that market. So that's one way to use volume. And then I track 11 or 12, I think it's 12 sectors. So we'll go through this quickly. I'm not going to highlight these. We'll just talk about those quickly. So this is symbol XLE Energy. That was in an uptrend. Now it's more of a sideways stage 3 consolidation pattern right now. Not really indicating whether that's going to go higher or lower. It is also sold off over the last 3 months. Energy, so that's just kind of sideways. XLF tracks financial sector. That is showing some relative weakness to the other market. The main markets going sideways, trading towards the bottom of a range there. And we've got symbol XLY, which tracks consumer discretionary spending and companies that rely on the consumer. That looked higher, was higher this year until the last 3 or 4 months. November and December tends to be a strong consumer spending time, seasonal time of year. And so it's kind of turned up here in November. We'll see. It's still at the bottom of this range, kind of in a support area. So my bias to that would be higher for the next couple of months, but we'll see. It's not always the case. Healthcare has had relative weakness. And you can see it plateaued back in December 21, hit another top, April 22, had a higher low in December of 22, and has not participated in the market rally this year whatsoever. Just sideways, and kind of down. Healthcare. Then we have technology sector, which looks fairly similar to the QQQ NASDAQ, trading towards highs, which is good for technology. So I would expect that to continue to be a leading sector. Utilities have been in sell-off mode since September of 2022, starting with this large range expansion candle. The sell-off in price made a new low for the year back in October, and then in November we have this topping tail candle indicating that utilities are not in favor right now. Utility stocks not in favor. Then we have industrial sector. Again, this will be very similar to what the Dow Jones Industrials look like, but this includes more companies than the Dow Jones. The Dow Jones is only 30 companies, so it doesn't really represent a broad base. It just represents large industrial companies. This is more broad based, and you can just see the weakness over the last 3-4 months, trading towards the bottom of this range. Price breaks this low, I would expect prices to go lower. If they can maintain this level and start to creep higher, I would expect prices to at least maintain that level. So that's just sideways trend. We have materials sector, which includes materials, things like chemicals, plastic companies, and steel and stuff like that. That has been also showed some promise earlier in the year. Has since went sideways and turned down. So this is showing relative weakness to our main market indexes, materials, symbol XLC, which is communications, which started selling off early in September 21, massive sell-off and communications, and then 2023 has been a great year for communications companies and service companies like um, Meta, like some other companies that deal with communications. However, not all companies have participated in that, especially companies like Verizon and AT&T. So this is more representative of the big move in Meta. So we have to go down and do some more homework before we make a decision. But in an uptrend and then consolidating, that's bullish for positive price action in communications. So then we have consumer staples, which you would think would be, doing okay because consumer staples tend to be kind of that stable company type of company like General Mills or Procter and Gamble. But this has been a really bad sector to be in for the last couple of years because you can see it. We had a plateau, spike in price, and has not made any new highs in this period of time. In fact, it's made this new low versus this area. So consumer staples has not been a good area. I believe the main reason for that is investors have favored technology, so that's where money is flowed into. And two, I believe inflation is really affecting these companies in a major way. We also have a real estate sector, XLRE. Real estate has also been in a steady downtrend since December 21, so that's almost 2 years of a bear market in real estate. So you can just see, money has flowed into technology and communications as it has not flowed into consumer staples or real estate over the same period of time. So that's relative weakness. Still in a bear market in real estate. Retail, clearly see the stages in this one very clearly, right? Stage 1, stage 2, stage 3, stage 4, and back to stage 1 in the sideways range. Kind of trading towards the bottom of the range in retail, so that doesn't really look that good right now for retail. So I'll stop there with these ETFs. I could go on for a while with ETFs, but it's just I watch those because that gives you more of a directional clue. So when we look at something like this one, which is called symbol MJ, which stands for basically marijuana stocks, we can see that that has also been relatively weak in a downtrend and in a not showing really any signs of price movement at all. So this is an area to avoid based on stage analysis versus something like let's take a look at this one if this looks any different. So this is symbol block BLOK, which is just an ETF that tracks data sharing stocks, and there might be some crypto related stocks. Again, you can see the trend 1, 2, plateau of 3 and 4. We're still kind of in the stage 1 trend. We had some price appreciation in June and July this year, and then it sold off, and now looks like we may have made a higher low. See this low point and this low here, where this looks like this could turn up based on this monthly chart. So that may be one of those ones you want to put on your list to just watch. BLOK and take a look at what companies are inside of that ETF to see, maybe do some homework for yourself and see, can you find relative strength and relative weakness using the overall market, such as SPY or the QQQ. Then you go into block, see what companies are inside block, and see, are there any companies that are starting to perform, and that could give you a clue to direction Again, we're trying to detect clues and be price detectives to see what's moving up, what's moving down, what's not moving at all. And so that's why we use kind of this top-down approach to looking at companies. So I'll show you another list I put together to just track prices. One would be semiconductors, right? And we can see that within a certain industry like tech, and then we go down into from that technology sector into something like semiconductors, we can see, looking at a monthly chart, where we're at with semiconductors. So we're kind of trading back here towards all-time highs. We had the run up in 2023, sell off in 2022, and then we've had kind of this correction, right? We corrected through price and time, and now in November, we've had a very strong November in semiconductors in general. And then when we look at specific companies like, let's just take a look. This is the most favored company on Wall Street, NVIDIA. This has really led the market this year. You can just see the overall extreme relative strength in NVIDIA. So we get a picture of, using a chart, just how good NVIDIA has been this year. So if you think about the gain in NVIDIA when it's trading down towards the $105 to $110 area, and then the same year we get up to almost $500. That is very, very strong. That's like over 400%. And so that's an area where if you had been watching, you could have participated in that price appreciation. And then we can look at some others that have followed NVIDIA and the semiconductor market up. One would be AMD, not as strong as NVIDIA, but kind of presenting on this monthly chart kind of a buying opportunity, I think, in AMD, right? We can see the downtrend, uptrend, and now we can see we had a 5-month sell-off in AMD, back down to around the 93, 94 area. Now we've put in a very strong November. So I don't know if you guys can see kind of that 3-bar turn there, that buy setup, in a location higher than this location, higher than this location. And so these price pullbacks, these corrections give us opportunities to take place in kind of the next move up. So if I was to draw that for you, we would see just exactly what I'm talking about. Right, so we had the sell-off. So you could say, this was a buying opportunity in hindsight, but we're never sure in a bear market. And then we had a new price level. Right, we had this range expansion candle, and then we had this pullback or this sell-off, which creates the next buying opportunity, right? So that's what we're looking for in something like that, AMD. And versus the market leader, NVIDIA, we would like to see AMD kind of catch up to NVIDIA. We'll look at one more. We can take a look at something like Intel company. Right, so Intel company gives us a little bit different picture than the other two. So on this, I would say this has been relatively weak. And we had this sloppy trend. We have a double top. That stage 3 plateau. Strong sell-off. Look how low that got. And then we had some buying take place with a big range expansion candle. And a little retracement here, and then we finally got into this, what I would call a weak uptrend. And now in November, it looks like we're starting to move back up. And I would expect prices. One thing I look at too on nice part about a monthly chart is targets. So here could be a target. This monthly bar could be a target. This could be a target. So you can see when we look to the left, we can even kind of establish some target prices for where Intel company may go. I would argue it's pretty weak. It's not a very strong uptrend, but in a slight uptrend nonetheless. Look at one more. This one's, I think, was a little bit stronger. Micron company. Yeah, it's showing a little bit more strength versus Intel. And that is looking like, you can see just higher lows, and went sideways a little bit. We've got these three are very interesting candles here. So here would be like a level. You can see where the ceiling became the floor. And we had a green candle, red candle, and a green candle. So that's interesting because that kind of called like a squeeze or a 3-bar sandwich or a 3-bar squeeze. And then we have this, again, a little pullback. Now we kind of have this buying opportunity looking like Micron is continuing higher. And right now we're almost to this top of this bar and this bar. So that'll be a quick price target below 80. Next one would be about 80. And then the next price target would be somewhere up here between maybe 95 to 100 bucks in Micron. So just give you guys some quick targets to look at there. Hopefully that helps. Let's look at a few more items as we detect and we look for opportunities. Let's close this list and let's show you maybe an area to consider, not right now, but I would say in the near future. Watch these companies. These are major companies that have been in just bear market sell-off modes, such as Coke, especially when you look at a monthly chart. Coke trading near 2-year lows here. Kind of reversed bottoming tail bar. Looks like that's positive. When you see that, that indicates that at one time this was a red bar, and now it's a green bar. It leaves that tail, that signals buying. Just like something like this bar, a topping tail indicates selling. This big red bar, these topping tails indicate selling. So, it did make a new low, so I would say not necessarily just yet. But Coke, if you're looking for some value, that's a possible idea. Pepsi should look similar. Yeah. Pepsi was, I would argue, stronger than Coke over this period of time, but over the last 5-6 months, it's definitely sold off to, again, around 2-year lows. What else do we got? MKC stands for McCormick. This is just a spice company. Has not participated at all in this 2023 uptrend rally, trading near 5-year lows. So that's kind of strange. Like, are people not buying spices anymore? Hershey looked very good until spring and summer of 2023, and is just sold off. Just steady selling in Hershey. So that when we see that, we would expect to continue that trend until it stops. And I don't see that stopping just yet. McDonald's is another market player. Had a nice uptrend over this 5-year period and has sold off for the last 4 or 5 months. So this looks like this may turn up again based on that bottoming tail and the screen bar. We'll see. But that's definitely showing relative strength to something like Wendy's. Hasn't participated in the rally whatsoever. Johnson & Johnson, again, has been selling off this year. Starbucks, another Wall Street favorite. Looks like, it did participate this year, but has now sold off and given back a lot of the gains of this year. Now, November looks like it's very strong for Starbucks. And, I like that. if this continues, it could retrace back towards the 115, 116 area. I would need more evidence, like trading over this bar. Say, yeah, Starbucks is one to get involved in going into the second half of November and December. What else do we have? Pfizer has sold off considerably. So since basically a 2-year sell-off, and still no green bars, no pivots in the sell-off. That's just extreme relative weakness. Pfizer, General Mills also in a sell-off since May of this year, getting near 3-4-year lows. Kellogg Company. Why they changed the name to Kellanova is a head scratcher. It's one of the most well-recognized brands, and that's somebody's ego thinking that the name of the company is more important than the performance. And you can see there's no floor yet at Kellogg, trading near 5-year lows. So got Mondelez, which had some nice price appreciation, participated in the rally this year, but has since given most of that back. So I think there's different reasons why these companies sell off, and the reasons can be individual performance, market weakness, sector weakness, things like inflation, interest rates. Some of these companies like Mondelez, let's say, versus Kellogg. Maybe Kellogg has too much debt. I don't know. Or maybe Kellogg lowered their dividend. I'm not sure, but it doesn't matter why. What matters is what's happening, and that's what price tells us. So, you can just see the difference between something like Johnson & Johnson and Kellogg. You really don't want to own either one right now, but if you had to, let's say you only had the choice between Johnson & Johnson and Kellogg, well, give me Johnson & Johnson any day, because this just looks awful in Kellogg. So let's go to, I think that should kind of give you some clues as to price direction, being a price detective. Now we're going to go to one more chart list. We'll just take a look at this week's list, okay? Or not this, I'm sorry, let's go to this month's list. And this is just something I kind of update once a month. And stocks that were maybe on last month's list that didn't make it may have come back into favor this month. So we just take a look at them once a month. See what's moving, what's not. Just go to a monthly chart. Just start going through what's hot, what's not. CF has participated in the rally this year. Recently, has looked kind of weak. Is following this longer-term moving average up. Price has actually caught up to this shorter-term blue moving average. And if this can turn up, I like CF. I definitely like CF to go back up over $100. We need a little more evidence on that. And one thing you can do to get more evidence is to go down to a lower time frame. So we'll go from the monthly to the weekly chart. See some positive signs for CF, where price has crossed over the moving average, then it came back down, it went back up. Now the last 3 weeks it's traded lower than the previous, let's say 6 to 8 weeks. So recent relative weakness versus the market, but like I said, I think if price can start to creep up again, get over this area, I like CF. So that's why it's on the list. Let's take a look for some more clues. This symbol WSM. That looks pretty good. A little bit of weakness over the last 2 months, but versus the market, I would argue relative strength. So that could be a possible one to watch. WSM stands for Williams Sonoma. And we already covered Micron. That looks pretty strong right now. Uber. I really like this chart of Uber because back here was the IPO at 42 bucks. We're now at 49 5 years later, 4 years later, and that looks like uptrend, pullback, and then reversal bar, kind of giving us that buy setup on a monthly time frame on Uber. So I'd like Uber to go, back up and test these highs at some point over $60. Next, Intel Corp we already covered, showing some strength, some buying, some pretty steady buying in Intel Corp. App, Lovin Corp, symbol app. Again, you can see the trend on this one pretty clearly, right? IPO at 70 bucks, went up, sold off, and now it's kind of came back into this rounded uptrend. Give us maybe a little bit of a buy opportunity right here in APP on a monthly basis. So when we see something like that, we can again go down to a lower time frame. We can choose weekly, using multiple time frames, and we can see this week had earnings. We have some topping tail candle, not really showing a lot of strength there with earnings, but I think if it traded over the high of this bar over 40, roughly 45 bucks, 45.10, I like that to continue higher. Then you can always go down to a lower time frame to look for your entry point. So right now, we don't see a good entry point because it looks kind of down on the daily time frame. But this earnings announcement and then a big red candle, I don't like that right now. So this is just one to watch. Again, if this was to turn around and start heading up over 45.10, I like APP. Walmart is showing some pretty decent strength versus other retailers. If we look at the monthly chart, if you were to say out of everything we've looked at, people always want a guarantee or what's the sure thing. Well, over a 5-year period, Walmart would have been a sure thing. And similar to NVIDIA, right? Just one of those market leaders that just made a new high. So we want to buy strength. We don't really want to buy weakness. And right now, Walmart is showing, at least in the retail industry, some strength. Veritiv has probably a little too much strength. While we want to buy strength, when you look at a chart like this, we can see extreme price appreciation. These big, large candles, that's prone to being sold. So right now, even though I like this company, I would like to see it pull back to maybe test this area or maybe half of this candle around the $30 area, $32 area. But if we get a continuation pattern and we get a large green candle, I would also buy that. If this shows more strength to continue higher, I would consider that. But right now, it's probably too far, what's called too far, too fast. So that's one to watch. Verisk, another one over the 5-year period, has really done very, very well. And given a possible buy setup here in this area at kind of what I would call minor price support, did sell off over the past few months, but now it looks like that's turning up. Not a cheap stock. Not a bad pattern of Verisk. Rapid7, symbol rapid. Early stage 1, I should say late stage 1 after stage 4 downtrend. So this is in consolidation. This is indecision. Buyers aren't willing to pay more, and sellers are not really willing to sell. So it's just kind of in a holding pattern. It does look like we've got a little bit of some buying in November. I would say if it trades over these candles here over maybe 53, maybe over 53 and a half, price can get moving up. This has a what's called like a price void to move up into. So you can see where this sold off. This creates this empty space up here. See all this space? Empty space in this area for prices to move up into if it gets going. So far this year, it just hasn't gotten going for whatever reason. Buyers are just not willing to pay more for this company at this time. So again, one to watch, RPD. This one is showing quite a bit of strength over the same period. I like that one as a trade, possible trade over 80. EWXT. Textron is showing basically a big sideways trend. Recently, it made a price move up and did not sell off that much with the market. It did kind of sell off and consolidated, but unfortunately, it's not taking part in November buying. So that's kind of one that, if it could turn up, that would be a continuation pattern higher. Not yet. What else we got? Fluor. Too bad. Marathon Petroleum, symbol MPC, right? Again, if you were to say, what's a sure bet over the last 5-year time frame? Well, oil and oil stocks didn't look too good, but all of a sudden, since 2022, have been in an uptrend. So that looked higher until recently. I don't like this big red candle here. I really don't like that. That's showing weakness versus the market. So that's that. AT&T, you know, I believe one of those like dividend aristocrats. You can live off the dividends forever, but when price goes down, 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 sometimes it doesn't matter what the dividend is because you just keep losing month after month. Now, recently we've had a bit of a bottoming pattern with a kind of a range expansion candle, red candle. It has a bottoming tail, which shows there is some buyers present. A volume spike, and then the next 4 months we started to move up. Is this the bottom in AT&T? Could be. There's no guarantee of that because we had some buying back here, but then that was sold off, right? Then we had some buying here, and that was sold off. So it's still technically in a downtrend, but there is some signs of life for AT&T, indicating that while the buying isn't extreme, the buying isn't very aggressive, there has been some steady buying of AT&T, and it also shows a lack of commitment from sellers to continue to sell AT&T. So it's possible the bottom is in AT&T. Again, that's not confirmed, but one to watch. Now, US Cellular has shown some real relative strength recently to AT&T. So, I wonder if this strength in US Cellular is causing buyers to kind of consider AT&T. Now, this was also in a downturn sell-off for a long time. So this recent strength is a bit of a surprise to go from below 20 bucks to 47, 48 bucks. Really surprising. So that probably needs some more homework to determine why that is. What else we got? Akamai, that looks like continued uptrend back up to probably at least 120 of where it's at now. So let's just take a look at it. Let's stop there. I think that should give you guys enough ideas, enough of a way to approach the stock market, kind of the way I approach it. And let's get rid of our tools, get rid of our drawing tools. So this video was made using just screen capture and a tool called Annotate and a writing pad. So let's take a look now at our agenda. Make sure I'm staying on agenda because I could get kind of off. So I think that should give you guys enough clues as to how to be a price detective, right? Using relative strength, watch out for earnings dates if you're going to enter into individual stocks. Watch your market leaders. You know, just think about Apple, big companies, Walmart, Dollar General, any big company that you can think of. Watch what they're doing. That can give you some clues to market or industry direction, and then develop a bias, and then go from there. What makes sense. Use some common sense. And then one more thing would be the idea of buying and selling zones. So let's take a look at, see if we can develop this concept kind of quickly. Relates to support, the idea of support and resistance. Okay, this one's not too bad to look at. This has had relative weakness to the market. It's in the marijuana industry. Um, Symbol ACB, Aurora Cannabis. And if we were to draw on here a couple of areas, you could say, well, this is kind of a support area, right? And out of this area, we had some buying. So, okay, so that's very easy to see. We had what's called a consolidation. Then we had a spike up in price. So that would be one way to identify what I would call a buy zone. Okay, so we call this the first clue as to a buy zone. And then we just watch and wait. So there's nothing to really do there unless you were on a smaller time frame and you caught that move. And then we had a plateau, right? Or we had a peak. We had this peak. We had a sell off. This is a daily chart. So we're not on a monthly chart. We're on a 3-month daily chart now. So we can see as prices come down, they're getting towards this zone, right? And when they get towards the zone, we look, well, what happens? Well, a little bit of leveling off there above that zone. And then we had some more selling. And then we had a leveling off here, kind of in the same area. A little bit lower than that area. And we had a little bit of buying out of there, not a lot, nothing extreme. And now over the past 4 or 5 days, we've had some selling. So now we're going to look for, is this an area that's respected? Will prices kind of start to do this again? Can we take a look at the zone, right, that we've drawn? And will prices retest the zone and then kind of resume? If that happens, then I would call this a valid buying zone, which can give you an early clue as to where prices will stop going down or up. So that is one way to use zones. So let's go and look at something else on a longer time frame to see, are there other zones that we could use. Let's take a look at maybe this one, symbol LPG, and see, can we see any zones in here? Well, on this time frame, we can kind of see a peak turn into a selling area. We've got kind of an area down here, area here. We had this, which was kind of a strong zone, so I would call that a zone. And we had this area where price had a tough time getting over, and then it turned into a buying zone. I would say if price comes back down in this area, that could be a possible buying zone. Violated that, then that would not be valid. But this one isn't the best look as far as zone. Let's go out in time frame. Let's take a look at maybe a monthly time frame or a weekly time frame. See, do we see any other zones? Not really on this one because it's just such a strong uptrend. I wouldn't really be looking for a zone on this other than if price retraced into this area, would it turn up again if it retraced like that? So not much to see on that one as far as zones go. Let's take a look at maybe another idea for a pricing zone. I'll give you guys a good example. Let's take a look at United Health Group. So now this works both ways. So not only do we look for buying zones, but we can look for areas of selling, right? So we had a kind of a peak, a plateau area, and prices came up to that area and sold off once, twice, and then sold off a third time, and then we're approaching that area again. So the question becomes, will it stop at that zone and sell off for a fourth time, or will it break that zone and create a new uptrend? And so that's another way we can use buying or selling zones to give us a clue to which way price will go. Now we can also see on this chart, you can see these bottoming tail bars were a buying zone, right? Buying zone. And when these price kind of hit that area, it tended to turn up. So I would call that a buying zone here and a selling zone up here. And then if price breaks that zone, you would expect price to continue in that direction. So that's just a quick idea for you guys to consider the idea of not just support and resistance, but looking at these areas of what is a possible turning point for any particular stock or market. Let's take a look at one more. Let's take a look at Pinterest pins. I think it's pretty clear to see this chart highlights most of what I've been talking about, considering, you know, like stage one, right? Stage two. Then we had a stage three peak. And then we had stage four, which created a price vacuum or a price void in this area, right? All that empty space. And then we've got back to stage one, really a weak stage two. So not a very strong stage two, but a slight uptrend in Pinterest. So I like Pinterest for the future going forward. I don't know how high it could go, but there's definitely, if some very, if volume and strong buying volume came into Pinterest, you could see that going, you know, depending on what level you want to look at, it could double 30 to 60, it could go to 90. It could stay in this very weak trend for 2 more years. We don't know, but just to give you an eye of a selling zone, previous buying zone, turn it into another buying zone. You can now see price slowly appreciated in that same area. So we do have some resistance here for the area of, you know, looking all the way to the left. That would be an area to price would need to overcome. We can also see possible price targets using this monthly chart, just like that. And so that's gives you a pretty clear example of what I've been talking about. So I think we'll go on and we'll finish this video by closing our tools and going to our final topic this month, which is our investor or trader apprenticeship. So got some forms. If anybody wants to apply for that, you're welcome to apply by December 31st, 2023. Apprenticeship would start on Saturday, January 13th. It'd be a 1-year apprenticeship, so you could kind of be the sorcerer's apprentice. And we'll give you guys some more one-on-one help on a weekly basis versus just watching monthly videos. And that'll be for 1, 2, 3 people. No charge, but you'd be responsible for all your costs of trading. So I have a few minimums. If you send me an email at laptoptraderphil@gmail.com, say, Phil, I'm interested in an apprenticeship, I would send you, I've got 4 pages of forms. that would include, why you want to be an apprentice, what's your financial situation, do you have a budget, and how can I help you? Will you need a trading plan, or do you already have a trading plan? Are you struggling? Have you never traded before? That's kind of where I'd go with that. So, just email me, and I'll consider you for the apprenticeship next year. So that'll wrap it up for November 2023. Thank you for watching, liking, subscribing, and sharing this channel as we try to give back one video at a time. See you guys next month. I hope you all have a happy Thanksgiving. Bye now.